What are your retirement portfolio priorities? This is from JP Morgan Wealth Management. It's one of the things they show their wealthiest clients, and you better believe they have extremely wealthy clients. And in a way, there's three goals, and this is what we try and help people with and try and work out which category they're in when we give them in the Great Investments Program the data and we give them the knowledge and the one-to-ones with me. There is that group which is wishing to increase wealth. That's what we all want to do, but actually their priority is total return. They want to ensure their investment returns exceed spending needs. Now, with this group, we will most probably have individual stocks. We will, rather than say exchange traded funds, so there might be a mixture of those, and potentially some leverage within there to give them in low volatility stocks or low volatility funds a bigger return. Then there's the middle ground, which is people who want to preserve the principal. They want to spend the investment return only, income and or appreciation. The priority is really to generate income. And whilst that is almost a steady state, we don't want to take the risk of going for too low a return because they might miss their goal. You really want to not quite shoot for the stars, but you want to shoot a little bit higher than they think, so there's a gap there's a buffer basically. And then finally there's the spend the principal. They want to spend the investment return and a portion of the principal, and the priority here is sustainable spending. They want to be withdrawing, they want protected lifetime income, or as it says there, a bit of both. Now, whether you're going to JP Morgan Asset Management or you're doing this for yourself, it's important to know these things. It's very important to know what the richest people are being told is good practice, because very often the good practice actually is a very good framework that's been worked out for them, which, well, we can copy. Why not? Don't the best minds copy from the greats? And so I often share with my clients, whether it's JP Morgan Asset Management data slides like this, or Goldman Sachs Wealth Management ones, which are also rather good, sometimes Morgan Stanley ones. All of these can be very useful. Just to explain in simple terms to clients, actually, this is what's happening, this is how we're looking to do it. My principle's always been go for the best and the biggest and see what the richest are doing. Not, my friend of a friend is an IFA, let me just ask him, which is a bit sort of amateurish, and unfortunately what a lot of people end up doing. And then they end up getting sort of skewered by places like St James's Place and having mass market spray and pray funds generating or degenerating returns. Okay, thank you.